Well, hello everybody. Welcome back from the Thanksgiving holiday. Hopefully yours was good. Mine was very busy, but a lot of fun as always. It's the 3rd of December, if you can believe it, the last month for 2025, and it's actually kind of behaving that way as far as what I've seen. First off, you guys know the deal. We're going to share some trades here. If you got them, please type them in. Take responsibility for it. We'll go through the meaningful news of the day, take a look at the broad markets. We'll also take a look at stuff technically and see what's been moving. And if we've got trades out there, I'll share them with you.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
So on our current outlook, we're just going to sit a little bit neutral. We did see a very strong bullish surge through the Thanksgiving weekend. We discussed this a couple of weeks ago, folks, saying that, hey, this is a pretty aggressive move to the downside. Lots of profit taking coming out of some of those high flyers, the Mag 7. I feel like a tape recorder, but I think that the more that you're reaffirmed it might keep you focused. But that move that we had over the Thanksgiving weekend was, to me, almost expected. We refer to those as the holiday rally or the Santa Claus rally. We could see one coming in through the end of this month. We do have a rate cut that's almost guaranteed. If you guys want to see that bottom bullet point here, a massive miss in the ADP employment, expecting a 5K gain, and it was a 32K cut. We'll see if that carries over into the jobless claims coming up here the next day or so. However, the markets, we started flat and slightly lower, and they're moving up. Kind of the reaction to a massive miss in the ADP employment. So that middle bullet point there, folks, it's targeting announcements, it's targeting AI deals, it's targeting healthcare. So it's difficult because the sectors don't stay strong consistently like we used to see them. And that is a very common thing to see towards the end of the year. It's also common to see at market tops. So the last thing we want to do, folks, is gauge tops, right? We just need to be aware of that. You guys have heard me regurgitate this a lot. Let's get into our economic numbers, and just to this point, this is big. I mean, it's not just like a little bit, expecting a little bit of an increase, and it's dropped. Now, this is not taking into consideration seasonal jobs, holiday jobs, temporary employment. That will actually show itself in January, February, I should say, the first part of next year. But I want to see if this big of a drop, and it should, because remember, we had things shut down, it should reflect here as well. So I'm expecting this to be a lot higher than that, but it might be a little bit delayed. This pretty much, like I say, is going to guarantee a rate cut here, which I think what the markets are responding to now. So that's what I've noticed. Once again, like I say, we had the week off. Well, I had the week off, come back, and it was kind of neat to actually see it with some fresh eyes. So let's just jump straight out into the markets. You could see this is kind of where we started. The Dow was pretty much flat when it opened, but the Qs was down, and so was the S&P. But you can see they've marched back up to actually kind of break even levels. So advanced decline line 64.32, kind of healthy. Pretty much what I would expect. And let's get into the heat map. And this is where it just gets muddled. It's not all green in every single place. We've got Oracle and PLTR, but Microsoft's down, things like that. Here's the bigger mover. This is big, and it's all specific in energy-wise. It's all oil. Now, I understand Exxon and Chevron themselves you could see almost half of that, but a pretty good move up there. You've got United Healthcare, big company, lots of stuff going into it. There's a couple of biotechs that are doing really well down in this area. But look at some activity going on over here in the financials, asset management. So it is pretty specific. Netflix is down, but we've got Google doing really well. So it's just kind of where you find it. I still believe that shorter term might be a little bit better. You guys want to do your credit stuff for maybe a week and a half. I think that can be beneficial. All right, so let's just jump back out. Let's take a look at the SPY. We'll start with that chart first. So actually, I can almost see the flag pattern here on the SPY. Now, it's so difficult because you can see just the decrease in the volume as we go through the holiday, the US holiday, but the momentum and the surge off of that bottom is aggressive. Remember the discussion that we had? We said, hey, we've seen this before, and it had a pretty good climb back. Well, here it is again, and it did the same thing. So it wasn't the expectation of, oh, geez, we're going to get back up here. It was if we can. And a good push above these moving averages is, once again, glass half full. It's stronger. I can't be bearish here. I don't want to say we're still in our bull trend, but this sell-off, I was expecting a little bit more taxing to come out of these markets, and it's just not. So that's why we trade the market in front of us. You can see anything that's moving strong, by all means, set up that pattern, set up that trade, and go for it. Weakness is still there, but as you guys have seen, and I've talked to a lot of you lately, is when they bounce off that bottom, oh geez, they bounce hard. All right, so where are we at? Well, we're at a resistance level. Now we are showing some lows, and I'm just going to use this gap because it makes a straighter line. But this is kind of that flag pattern I was trying to see. It's a little bit more relevant on the Qs, but take a look at that. You know, decreasing flag pattern, breaks out. If it can consolidate here and exceed highs, then we have the confirmation of a very strong longer-term bull flag pattern, which is what they usually do. However, I don't see anything coming up that can justify the sustainability of breaking into brand new highs. There's two sides to this coin. The first one is, look, we're going to get that rate cut, but some of these numbers are showing panic fall. If we got 32 jobs cut and the economy's still hanging in there, worries about what the tariffs have done or haven't done, if that unemployment claim number starts to climb, well, then all of a sudden it's okay. We're going to break out, but no one's going to have a job or money enough to buy anything anyways. So how far does this go? So it's this real weird teeter-totter. And unfortunately, folks, this really doesn't come to light until we see the end of the year. And that becomes, okay, what does the Santa Claus rally do? Is this literally just a big ipso facto, like take some money out of the high flyers and put it into mergers? And maybe it's, you know, the money that we've seen, let me get rid of these. The money that we saw put into over the Thanksgiving rally is just that. It's just the FOMO, late year adjustments for 2025 from fund managers. And come 2026, it's a different story. Okay, well, there's the hard part. Here's the easy part. We can still trade it if we can still follow it. We just need to be more specific and more precise, and we can't really ask for too much. What I mean by that is I don't see us sitting in anything for 3 to 4 or 5 weeks. I don't see me doing a +3 trade or -3 trade here anytime soon. I'll be doing dinks and ducks, maybe a +2, -2 at most, maybe a week and a half, and I know I've been saying this the same, but be super selective on the stocks that you're putting it on. Let's get to the Qs. And what I mean by that, don't put it on the ones that seem to react and bounce and have large moves, big candlesticks, stuff like that. If something's in a downtrend and continuing to stay that way, good bear. Something's up, continuing to stay that way, good bull. All right, here's the Qs. This is a little bit more easy to identify, that flag pattern, right? But it just ran out of steam once it just got above there. So we're still at previous resistance levels. This isn't the greatest move to the upside, but it sure did eliminate a lot of weakness. We're above other levels here. We're above this level, right? We're back up to this resistance. We're above this previous support. It's this kind of a 0 +1 -1 market. Let's take a look at the RSP. I know I talk a lot about that lately, and it is also showing overall signs of strength. When you equally weight things, the S&P is comfortable back up to this area, but it is still in its channel. We talked about this channel for a while. You know, the S&P seems to break out and then break down. This is staying in a channel. The only actually time it was threatened was a little while ago, but look where it is. It's back up in that channel. My expectations is for this to hold outside of, you know, any of those larger companies, which the S&P will actually show you, but the RSP, I imagine, kind of just stays where it's at. So if you mute everything and calm it down, we are kind of in a consolidation, and it is very specific to stocks in the news. Okay, so let's get into your picks. BK, Bank of Mellon, just got done talking about the financials showing a little bit of strength, a little bit of a surge, and this looks like it's participating. Looking really good today. Be mindful that it could continue to, this could turn into one of these dojis that we've seen over the last few days. Just be aware of it, kind of hopping back and forth. So when you're doing targeting, notice that last time it was extended, it did have a correction. This could be a little bit different because it's up there again. Let's see if it can break out. I would do something more of a +1 on this. Thanks. Let's take a look at your bear here. This is BBWI, Bath and Body Works. Okay, big miss. Looks like it's having a massive short cover rally, or whatever you want to call it. We call it just a bear rally off of a bottom. Oversold bounce, you can refer to it as that. It just depends on where it wants to plateau. I imagine if it once it starts to plateau and starts to roll over, some of the traders that wish they sold it here got some of their money back, and you could see another surge of selling. Most of the time that does happen. Oversold bounces that create what this is called is a closed gap. That's usually the biggest sign of, okay, next time it gets up here, I'm dumping it, right? If it doesn't even get there, which is referred to as a open gap, it shows even more weakness or strength depending on the direction. In this case, it's to the downside. So now we treat it as a bear rally. Now, the confirmation is going to be difficult because right now it's just kind of plateauing here. You're going to need something like this candle to confirm, which means, oh, geez, you might have felt like you missed it, but your target's going to be somewhere down in here. I'll put it on the watch list, but it's early. Wait for it to confirm. But boy, when things fall out of favor, they fall out of favor. Moving over to deck, you've got an oversold bounce. I imagine it'll get to a point. Let's do the same thing. Let's talk about our open gap, closed gap, right? So there's that printed price before the gap down. This was the low, but okay, yeah, we'll keep that because it's already past that. Here is a support level, and folks, I could probably carry this thing all the way back to here. So it's at a pretty decent level here. However, this is the gapping point. So that's the one that's going to matter. So it could shoot all the way back up to try to close this gap. But when you get a surge like this or a short cover rally or oversold bounce, I would not be surprised to see it hesitate right around where it's at. It's good on the bear side. Just be patient with it. It's definitely out of favor. So it's very similar to BBWI. Let's jump over to Apple. It's just in favor, just being acquired. Volume's tough because so you can see that it did decrease, but it's picked up over the last couple of days. Apple always seems to have some sort of announcement or deal. So I imagine this could continue. One of those stocks, one of those larger companies that seems to be acquired lately. It's a little bit extended here. Just draw your moving average target lines or snap fibos on it. It just depends on if you're in it already or if it's something you're looking at. Right now, I don't think technically wise, it's giving me a favorable pattern to the upside. Maybe something sideways. I'd wait for its first correction. Unfortunately, it might not correct for a little bit. It might just continue to float higher. But after the correction, you know that this could turn. Let's get to Citigroup. Another big company, big name, large cap. This time it's in the financials, and look what it's doing. It's breaking up higher. Nice breakout today. This is really good move today. Good confirmation. The financials really haven't been doing much as of late, but boy, for some reason, the last little bit, even specifically today, there seemed to be getting interest. And what I mean by that is I'm seeing somebody go into it. You guys already saw the heat map. Good confirmation. Looks like it's breaking out. Just find a target, find a time frame, and find a range. All right, let's take a look at a couple more here. Let's get to GEV. This is a sideways trade, bleeding lower, but kind of choppy sideways. Look at the size of these, the red candles. When these red candles hit, they have big tails and big, tops and tails. Take a look at this. It looks like it did participate a little bit in that rally over Thanksgiving, but it does seem pretty comfortable, I don't know, as of late. You got a little bit of a turn here. So if you want to do the longer term and just expect it to roll back over, I would be more comfortable playing this as kind of a sideways to down. If it could get back to here, this 540 might be a better target. But if it does this, and it breaks out, then you might have a breakout of a flag pattern as well. So I would wait for this to maybe kind of confirm lower and play it sideways to down. I'll put it on the sideways watch for sure. Let's take a look at another sideways. Let's move over to Schwab here. Now this financial that's not participating in what the financials have been doing today. It might be. Take a look at that. That's a bullish engulfing candlestick pattern that's trying to develop, and it's at a very, looks to be a very, or a pretty important area. So if we can establish something to bounce here and actually start to move higher, then you're kind of back into this area. So yes, this is a sideways candidate, and I like the candle today. The last one we took a look at, I wanted to see a little bit more weakness. This actually could do better with a little bit of strength because we do have resistance. Another good sideways candidate. So give it a good range and be mindful of your time frame. SLB. Moving over to our energy. Nice move today, isn't it? I liked yesterday's doji. What's really cool about some of these candlesticks as of late is when you see shadows. The shadows are neat. They kind of tell you where it wants to go. A couple things with this, because it is the 200-day moving average. I don't know if you guys have it up or whatnot, or if you have your 20 and your 50, crosses. It looks like it wants to start an uptrend. I would wait for a $38 breakout before that happens. You could see it kind of failed here, failed there. But things might have changed, right? I don't know what their earnings are. And if energy and oil start to continue to pick up, it would be nice to see a nice little breakout, right? Just kind of target that with some Fibos. Be patient with it until it gets above that 38. Let's take a look at VRT. Okay. A symmetrical triangle pattern? Maybe. Look at this. What do you guys think? I don't know. Getting tight? It's tough when you see them drop, though. But I like the shadows. This is being purchased off the bottom once again. Yeah, maybe a break above that previous high. You could go all the way back up to this little pivot point there and use that as resistance, the 190. Similar situation to SLB. Not as cut and dry, though. These are a little bit harder to gauge. But I do like how it currently is just above, this big red candle. It's just above that. So it's showing that it's kind of trying to emerge. This is your support level here that would put it back into that bullish pattern or not as bearish. As long as it stays away from that, sideways to up. Let's take a look at this XOM trade. We are seeing a 117, 119 bull call. Thank you for sharing. All right, so let's get into it. We've got the 116, 119 bull call spread. Just looking for maybe a confirmation of follow through from this previous pivot point. Because it did confirm. Boy, it confirmed quite a bit on this day. Look at that shadow. But it's looking really good. Great. Awesome. And you've got 3 more days if you did the 5th. Great trade. I love it. Target would be right around the 120. 119 is great. Boy, if that continues, all you need is just a little bit of a pop. Good trade. By the way, folks, I do like the pattern. If you think it might hesitate up in these areas, that's fine. Just wait. Just wait to see if it actually climb up there, and if we see some continuation in some the strength in the energy sector itself. Let's go to bull call UPS. Okay, gaps up, comes down, stays bullish. Right? We talked about open and close gaps. It gapped up to this is where to open. It came down. Didn't close it there, but it looks like it was setting a downtrend. But we're starting to see a push. And it's pushing above the resistance area, above a 200-day moving average. Now, what you're looking for, Jack's saying he's looking for a 95, 100 on this. That's great. I mean, we're already about halfway through that. Be patient with it. I mean, this is one of these things where it was downtrending and looking bad, but it looks like it could start to turn back around. TSM, Taiwan Semiconductor, all right. Zoom in a little bit on that. Okay, kind of the same idea, right? Very similar to what we're seeing with those flag patterns. This actually had kind of a resistance area. I would expect it maybe to have broken out at this point. It looks like it just didn't do it. Still, we're seeing it come off the bottom. We got those good shadows we like to see. The push and pull in this range. So you have a level here. I believe that 295. I can't see it, but that's going to be pretty big. I just like to see those shadows. A nice pop out might not last very long. 305 is a pretty good resistance, folks, but understand, I mean, that's $10, right? Be tight with it when it comes to time frame, but flexible when it comes to targets. Did that make sense? I hope that does. Look at the volume on that. They're kind of leaving it alone. This seems like it might want to kind of meander sideways. Now, if you want to be super reserved with this, wait for this to maybe get above that 305 level before you get into it. Okay, let's take a look at a couple of pairs here. SMCI. So you take a look at what was in my notes for today. This is a technology semiconductor, and it is just it's not doing well. So it's the size of the company that's in favor versus all the others. So there is an advantage when it comes to playing inherent weakness, even though the sector appears super strong. And if you can identify that, then yes, you can go long and short in the same sector and do well. Like the consolidation, looks like it's trying to roll over here. Something sideways to down on it. Let's take a look at another bear. Thanks for that. VST. So identify the weak, stay with them because they continue to be weak, and hit opportunities when you get them. So nice bounce, pull back, some shadows trying to keep it above that 200. Here's another shadow. It looks like it's really trying to stay there. You might have some push-pull here at the 170, but sideways to down, credit side, right? Something below 180, credit around the 170, because even if it breaks and comes back, the credit can still work out for you. So a 0 to -1 on this, absolutely. So let's just kind of end it there, folks. I appreciate the participation. Let me go ahead and share what we looked at, and here it is. Some of the stuff that stays sideways can break down or break out. But this is the end of the year. We get a lot of profit, or they call it window dressing, if you guys are familiar with that term. In January, all those hedge funds have to sell you that fund, and they're going to say, "Hey, we had Apple, we had Nvidia, we have this, and now we're buying all the healthcares and the biotechs." So that's kind of what you'll see. Thank you so much for your participation, and see you guys later. Bye, everybody.